Hello, Jim here. Today I want to talk about a new option wheel strategy that I set up for people with small accounts, say an account around 10,000. I'm going to talk about the type of trades that I am suggesting in the strategy, like what kind of delta, what kind of expirations, and I'm going to share with you what I've done so far. I've actually started this strategy for January and how it might perform over the coming months. I'm also going to talk about the market, what I think is going to be happening with the market going forward. We had a pretty rough Friday. You'll probably be seeing this video on Monday, so I'm filming it currently on Sunday afternoon. So by Monday, we may already know what the market's going to do. It may continue on a downward spiral, or it could rebound and have a nice bounce on Monday. You'll know at this time when this video is released, but I'm going to kind of give you my 2 cents, what I think or where I think the market's going to go from here. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. I did set up kind of a list here so I don't forget anything. These are the main things I'm looking at that potentially might impact where the market goes from here. We did get hit pretty hard on Friday. The market was down quite a bit, and primarily because of the jobs report, which increased the fear that the Fed probably won't be doing many cuts this year. I think the consensus is probably 2 cuts. It also kind of points to higher inflation. So it definitely, was one of the worst days in the market since probably earlier, much earlier in 24. And then another headwind we have is the debt ceiling. It's going to be occurring soon. My guess is there's probably going to be some fear related to it, and the media is going to try to scare people. I just hope they go ahead and make a deal and kind of move forward. I'd like to see some of these policy changes that will occur with the new administration. Hopefully, they don't get tied up too much with the debt ceiling. And then one big factor that's going to majorly impact the market over the coming weeks is earnings. We're getting ready to jump right into earnings again. We have some big players having earnings later this week. I believe JP Morgan, Schwab, and several other financial institutions will be having earnings announcements this coming up week. And then later in the month, it really takes off quite a bit of earnings. And that typically adds a lot of volatility to the market. And then inflation and Fed noise. The consensus currently is the Fed's probably not going to do more than 1 or 2 cuts for the rest of the year. And they may not come till pretty late in the year, maybe September, October timeframe, which I personally think that's okay. I like where the rates currently are. I like being able to earn some good interest on my savings accounts or my money market accounts. So in a way, I don't mind them, sticking to where they are now, or maybe doing 1 or 2 more rate cuts. I'm okay with that. And then finally, the AI bubble. Are we in an AI bubble? I think we are there. We've gotten to the point again, and I saw this in 2021, where it seemed like price did not matter. Now, what happens typically, and I've seen this over the years, I've been an investor going all the way back to the 80s. So I've been involved in a lot of corrections, a lot of bubbles. And typically, when that bubble bursts, suddenly price does matter, and the companies that have crazy valuations come back to earth. We saw that with Intel and Cisco back in the 90s. In the early 2001, actually, I believe it was 99, that both those companies hit their high, and they still have never even gotten near that high again. Cisco, I believe, may be getting close to it recently, but you're talking nearly 25 years, and they still have not reached that high. So when and if the AI bubble does burst, it will have an impact. My hope and what I'm expecting to happen going forward is it's not a huge bubble burst. The fact that we have a new administration, I think potentially we have a down year. Maybe we finish the year like the S&P 500 is down 5% or something along those lines. I'm hoping it's not another repeat of 22 when we gave back pretty much all our profits from 21. I think it's going to be we may get a couple bigger dips, but I'm expecting more of a sideways. We may be up by the end of the year a small percentage or down a small percentage. So that's what I'm planning for. That's how I determine the type of strategies I want to do. That's also why I like to purchase calls and puts, especially puts for the protection on the downside. So I might have a cash secured put and I might buy the put if it's relatively inexpensive, just in case the market has a major drop, because then that put will gain value and it'll give me opportunities or choices that I would not have if I did not purchase that put. For instance, it could help me lower my cost basis if I want to own the stock, or I have turned a lot of positions from vertical put credit spreads into cash secured puts and been able to lower the strike price. One example is AMD, another one is Micron. So I just wanted to mention that if you're new to trading options, don't worry about what I just said. It won't make a whole lot of sense. This next part of the video will make more sense. So let's jump into the next part of the video. I'll share with you my new strategy and kind of the details behind it. And I'll share with you the actual trades I made. So stay tuned. Let's jump into that next part. Now you might ask, why am I doing these three different types of wheel strategies? One of the reasons, especially with the latest one, my 10K conservative wheel strategy, is I want to teach my son. I want to allow him to also be able to trade options with a much smaller account. So that's why I picked a $10,000 account. So his account is around that, and it's something he could potentially do too. Next is I wanted to explore new strategies. I'm experimenting with different approaches, including varying contract sizes, deltas, expirations, and option strategies. I'm refining my methods, trying to figure out what works best, especially, trying to find what will work in different size accounts. Now, some of these accounts, the way I'm doing it is I'm only using a certain amount of cash, but it will still work out, meaning I don't take a lot of risk. And if any of these get assigned to me, any of these positions that I'm selling options on, I'm okay with that. I'm okay with owning them. So that's two of the main reasons. The last one is I've had lots of questions from members. So I'm trying to find a practical avenue for members with smaller accounts so they can participate effectively and build income in these small accounts. So I've actually, within my memberships, and if you're curious about my memberships, you can find them. There'll be a link to this page in the description. I have 3 levels. These are month to month. I don't require you to be a member for several months or a year. You can join for 1 month, leave the next month. And I have that happen. I've actually have had some members return recently that took a break. And they're pretty straightforward. The only one I do offer a free 7-day free trial is this investor club. So if you want to try it, but you don't want to commit to it, I do allow that. I may do away with that down the road because there's so much free stuff now. There's so much, the planning worksheets, all the different things that I've done. Plus, I've had people get on before and not necessarily cause issues, but they weren't particularly joining for the right reasons. That's also why I turned off the start 7-day free trial for both the Traders Club and the Coaching Club. So the Traders Club, and all 3 of these, you get my trades. I post them and you get a notification from Patreon right after I post them. But the Trader Club includes Discord. So we discussed it in my Discord, and we decided that doing the 7-day free trial, some questionable people were joining and then going into the Discord and trying to take people, trying to scam people or take them off site. So that's why we decided to not do a free trial with it. But within the Discord, you get access to all the different channels. There's a lot of people sharing their trades. There's people doing zero DTE. I do caution people that's can be a very risky type of strategy, but there are definitely people doing that. There's people doing futures, and there's riskier trades, less risky trades that are in different channels. So there's quite a bit going on there. Of the three types of memberships, I do think Trader Club is probably offers the best value at the best price. Now, Coaching Club includes 2 sessions with me each month. You get everything else in Trader Club and Investor Club. Also, I forgot to mention in Trader Club, every other week we have group meetings. So it's a Zoom call. Everyone participates. We may talk about our favorite stocks or any number of things. And then Coaching Club, again, is you get the sessions with me 2 a month. And they're supposed to be 15 minutes. They typically go to 30 minutes. You can ask me questions. You can share your trades with me. I can share details about my trades. So it's a pretty, you get a lot for not spending a whole lot. And I'm trying to keep it this way. I don't want it to be a burden for people to be able to join. And I also don't want to force you through a bunch of avenues and force you to pay a ton of money. So this is how I've chosen to do it, and it's worked pretty well. Most people have been really, really friendly, and I've gotten some really nice feedback. So let's jump into the spreadsheet now. So this is my wheel strategy spreadsheet. This is the new one that I've just done. I did both these trades on the 8th. And the idea is to do, in a smaller account. So this is right around 10,000 in the account. I'm using 9710, but the idea is to do a 20 delta. So take a little less risk than what I take in my monthly wheel trade strategy, which is a different tab in this same spreadsheet and also has all those trades. I went over that in the last video. But the idea is if you have a $10,000 account, you could potentially just do 2 trades. And I did these on, I believe it was Wednesday, both cash secured puts. I did 2 of HIMS, which I did it right around a 24 delta. I believe the next one lower was like a 15 or 18 delta. And I did it at a strike of 22.50. I brought in $210, which is, HIMS has really good premium and it's fairly inexpensive. So with an expiration of 131, so I could potentially do another trade within January on HIMS, and I probably would, the week before, if HIMS is, say it gets a bounce this coming up week and it gets up to 25 or 30, which it has before, then this trade will become very profitable and I could potentially close it for a real nice profit. But again, I'm also okay with it being signed. Here you can see required capital. That's pretty much the 200 shares at 22.50 minus the 210. This is how you come up with 42.89. And this on a yearly ROI. So if you did this every month, you would earn nearly a 78% return, which is pretty surprising. So one trade with 2 contracts, you're earning 210. You might not earn that much in interest if you're in a money market account. Now, the next one I did was Fiverr. I use Fiverr. I really like Fiverr. I'm actually going to be putting a project in later today to one of the people on Fiverr. I do all my graphics through Fiverr. I've done some of my voiceover. I've done, some of the short videos that I share with my icons, and not icons, but my logo and stuff like that. So this one I also did 2 contracts. I did a 28 strike. Currently, I believe they're a little bit over, I think they're 32 or 31, expiring on 221. So this is truly a monthly. So that's the next monthly expiration is 221, a 21 delta. So again, I'm taking a little bit less risk, but I still brought in 178.66. And my required capital, again, is this times 200 minus the 178.66. So it's 54.21. And this is like a 27.34 return. I like both these companies. They have good numbers. I think they have little to no debt. Also fairly good profitability. So they fit that criteria. And I like to constantly go back to people. Price does matter. It may seem like it doesn't matter, but it will. So you don't want to majorly overpay. So look at the fundamentals, determine it's a good company, then determine is it at a good price. Now, HIMS, I think, is still a little bit pricey at $22.50, but not crazy overpriced. Fiverr, I think, is right there. It may be it may be not overpriced and not underpriced. So for these two trades, I was able to do 389.32 again on a $10,000 account with a total capital of 97.10. So next month it would be 10,000 plus the 389 if nothing was assigned to me. But this is like a 4.39% monthly ROI, which is pretty significant. That's like more than the rate you would get on a yearly basis in most money markets. I think in all money markets, probably since the Fed's done their recent rate cuts. A yearly ROI is almost 52.64%, which is like a rule of 72, which relates to if you divide 72 by the interest or the rate, you can come up with how quickly you can double that account. So I could double this account potentially if I did this month in, month out in 1.37 years. So in a year and a half, I could potentially double the account, and maybe in another year and a half, I could double it again. So you can see how compounding could really be ramped up. Now, say you have a $5,000 account, you could potentially do the same trades, but only do it with one contract. You'd only need half the capital. So you would only need 4850 versus 5,000. So you have choices. You can also, and I do encourage all my members, and I do have a lot of members who listen to these videos. When I do a trade, don't just copy me. Don't just do the same trade. Do your own research, do your own due diligence. You may decide, well, I'd rather do a different expiration. I'd rather do a different delta. I'd rather take more risk, less risk. So if I wanted to take less risk, I would do a 10 delta or a 15 delta. If I want to take more risk, I would do a 30 or 35 delta, which if you take more risk, you'd make more premium. If you take less risk, you make less premium. But if you can earn these kind of returns, well, maybe you should take less risk. Maybe you should do more like a 15 or 10 delta, which would probably put Tim's at like $20 a share or 17.50. I believe these or those strike prices move by like 250. So I believe it's like 17.50, 20, and 22.50. I could be wrong, but I think that's how it works, at least for those the 131 expirations. Similar situation with Fiverr. If you did a 15 delta, this might be a $25 strike. So don't, anyone out there, if you're looking at trades and you're trying to follow people, do your own due diligence. You might decide, well, I don't like HIMS. They're too risky. I don't really like the doctors that they use in their, they provide an online service where you can meet with doctors. And it's usually related to things that, are hard to find with regular doctors. I don't want to put it a lot of stuff that I think regular doctors don't necessarily work with, or you might not like Fiverr. So again, do your own due diligence. Look at the fundamentals. Look at the technicals. I look at technicals, but I don't dive deep into technicals. If you're a technical person, then look at the technicals. But definitely take your time and think about these trades. I want people to learn. It's the old proverb, teach a person to fish and, they'll never be hungry again. It's the same thing here. If you learn how to trade options, you'll become a better investor. You make the right choices. You can live whatever life you want because you'll be very prosperous. But if you get greedy, you take huge risks. You don't care about what something costs. Any price matters. Momentum is the only thing to look at. You could potentially be putting your accounts at risk. So here's some notes related to this: is testing how well the wheel strategy works in a small account. So that's my main goal. I want to see how it works. Here you can use one contract for each position if the account is even smaller. So say you've got a $5,000 or $6,000 account, you could use one contract for these trades. Use around a 20 delta for these positions, taking a bit less risk compared to my monthly wheel trades and my spread wheel trades. And again, you might decide, well, I want to do the same thing, but I want to do it with a 15 delta, so you might take less risk. If possible, try to do multiple trades during the same month. So that's what I'm trying to do with HIMS. So maybe I can do around the 24th or something. I can do another trade and do even better for the month of January. And then if you can be more difficult, or it can be more difficult to make a higher return due to limited resources or fewer trades, which is true, but it can also have a pretty big impact because it's a small account. So one or two really good trades can have a major impact on a monthly basis. Again, if you think about just making $389 in a $10,000 account in 1 month is pretty substantial. So it kind of goes both ways. If you want to take a lot less risk, you know, it may be more difficult to make more in such a small account compared to, say, a $25,000 account or a $50,000 account. And then, as always, stick to good companies at good prices, which I emphasize in every video. So this is what I wanted to share with you guys. I'll be sharing this with my memberships. I'll probably post this last video and include this spreadsheet with it because I continue to make changes, and I have a lot of members kind of asking me about posting this. I did post the previous one, but I'm working on these, making them better. I also have favorites, and these are favorites. I'm trying to set up a favorites just for wheel type trades. And this is work in progress, but it's not the same favorites that's in my monthly or my weekly my weekly planning worksheet, which has all my trades. And I released that earlier today to my membership. So that's what I wanted to show you guys. What do you think? You know, are you doing something like this? What do you think of HIMS and Fiverr? Please leave a comment. I typically will respond to them fairly quickly, usually within 24 to 48 hours. If you see something you don't agree with, or if I've blatantly missed something, let me know. I've got a thick skin. It won't bother me. So as always, thank you for taking the time to watch, and I look forward to seeing you next time.